Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. And today we're going to be talking about $6,000 in trade lines that you can get in 2025 to boost your credit score. And this will actually be a compilation video of two previous videos, except I'm going to put them together. This was requested in one of the comments. So with these two credit lines, you can actually get $6,000 in revolving credit, and that's going to be a credit line that reports as a credit card to the credit bureaus. Now, this requires no credit check, so anyone can do it as long as you are a U.S. citizen. The two accounts that we're going to be looking at is Kickoff. That's going to be a $3,500 credit builder, as well as Ava. That's going to be a $2,500 credit builder. Once again, both are revolving lines of credit for a total of $6,000 in credit line. Links are in the description if you choose to sign up for any one of these. I highly recommend that you watch both the videos all the way through so you have all the details and you also understand exactly how both of these credit builders work. Not only will this video also include the revolving lines of credit, there are also some installment loans and additional types of credit builders that you can also get that will build your credit score. And once again, thank you guys so much for watching this video. You can click on the timestamps for whichever video that you would like to view first, or you can watch the entire compilation all the way through. I think a majority of the questions will be answered in the video. Thank you again and have a great day. Today, we're going to be doing an updated review on Kickoff, the credit builder accounts app in 2025. Now, if your credit score is sub 700, then you definitely want to pay attention to this video. One of the hardest parts about building your credit history is getting access to credit in the first place. So if becoming an authorized user on someone else's credit card isn't an option for you, or you can't afford the deposit on a secure card, Kickoff offers a simple way for you to build your credit with the Kickoff accounts and the credit builder options that they do offer. On average, customers saw an increase of 28 points after 1 month with using Kickoff products. Since my initial review, a lot has changed with Kickoff. They offer a lot more products that are going to give you many options for building credit, and I want to cover all the changes. So without further ado, let's get right into the video. First, I want to talk about who is Kickoff. Kickoff Inc. is a financial technology company, a fintech. They are not a bank. They help people build credit. It offers a revolving credit line, a credit builder loan, a secure card option, and rental reporting services. Now, sign up takes only minutes and you can cancel at any time. There's no credit check, no hidden fees, no interest charges. Kickoff offers 3 credit building plans: the basic plan, the premium plan, and the ultimate plan. Now, the Kickoff basic plan is $5 per month. That includes a $750 reported trade line that reports to Equifax, Experian, and TransUnion, so you will get all 3 bureaus reporting this account. This plan includes tools like Vantage Score tracking and insights. The next plan is the Kickoff Premium plan, which is $20 per month. It includes a $2,500 reported trade line that reports to all 3 credit bureaus as well. Now, this includes all the same features as the basic plan with the addition of rent reporting. Finally, the Kickoff Ultimate plan is $35 per month. This includes a $3,500 reported trade line that reports to all 3 credit bureaus. This plan has all the same features as the basic and the premium, as well as a $1 million identity theft insurance, and it also includes personal data protection. Now, I want to give some more details about the Kickoff revolving line of credit. These are things that I got directly from the comments that were asked throughout the year. Now, some people have wanted to know, can I make a purchase with the credit line that I get from Kickoff? And yes, technically you can, but it's not the way that you're probably hoping. Now, the credit account is not intended for everyday purchases on things like gas or groceries. It can only be used on the Kickoff store to finance the purchases or renewal of credit builder plans like the Kickoff Credit Service Basic, Premium, or Ultimate. There is educational content like ebooks or digital courses that you can purchase with this credit line. I've personally had Kickoff for the last 2 years, and I just want to give you the best way to use this account without having to worry about anything. If all of this seems like it's a lot of information and you want to simplify this and make it as easy as possible, enable auto pay, and that way you can build your credit without having to worry about due dates. Keep in mind, Kickoff will report late payments, which can be very damaging to your credit score. Kickoff also offers another product called the Credit Builder Loan. This is an additional add-on that you can put for building credit. It is completely optional. There's no obligation for you to actually use this. The first thing it does is help with your credit mix. Your credit mix is 10% of your credit score, and this will really improve it because you'll not only have a revolving credit line, this account will be seen as an installment loan. Again, helping you have a diversified credit mix. Now, the second thing that this will do is help you save money and build your credit all at the same time. Here's how the Credit Builder loan works. You enroll in the Credit Builder loan and you pay $10 every month for 1 year. Kickoff reports each payment to help you build credit and saves your Credit Builder loan payments for you to withdraw later. After 12 months, you can withdraw the full $120 that you paid. Now, you need to note this. The withdrawal does not include any card processing fees. You will not get that back. You'll also want to note that this is currently not available in Hawaii, Indiana, Oregon, and Wyoming. Now, I recommend that you look at the website because in the future, this information may change. You'll also want to keep in mind that this account only reports to TransUnion and Equifax. Now, there are a lot of companies that charge interest and fees for this same type of product. So overall, I think it's a great add-on, and I've personally had it twice myself. And it has served me for the last 2 years and has helped me increase my credit score. The next Kickoff product that we're looking at is the Kickoff Secure Credit Card. Now, the Secure Credit Card is only available to Kickoff Premium and Ultimate users. If you're on the basic plan, you will not be able to get this feature. Now, the Kickoff Secure Credit Card is a great way to build credit with everyday purchases. To apply, go to your user dashboard and select the Secure Card tab. You can also apply directly through the Secure Card credit card application portal. During the application, you'll be asked for your name, your address, your date of birth, and any other identifying information like your driver's license. And this is for anti-fraud security. They'll also have some questions that help prevent identity theft, and you'll answer these, and it's just industry standard. They also are security encrypted, so know your information is safe if you decide to do this. Once you're approved, the virtual card is available immediately in the Kickoff app, and to begin building credit with your purchases and to receive the physical card in the mail, you need to make a deposit of $50 onto the Secure Card via direct deposit or bank transfer. Now, once you've made this deposit, your physical card should arrive in 10 business days. Now, the Kickoff Secure Credit Card reports to all 3 major credit bureaus. That's going to be TransUnion, Equifax, and Experian, as long as you at least make that minimum deposit of $50. Now, you will see the account show up on your credit report as a secure card or open account, depending on the bureau system and exactly, what information they decide to use. Now, Kickoff does not report utilization for the Kickoff Secure Credit Card, so there's no potential for high utilization rate or anything like that that could potentially hurt your credit score. The Kickoff Secure Credit Card has a daily spending limit of $2,500, meaning any payments attempted within a 24-hour period that exceed this amount may not process. Please be aware that these limits operate on a daily basis, and that's going to be from whatever time to midnight. So for example, if you spend $2,500 on Monday at 4 p.m., your limit will be reached until 12 a.m. on Tuesday. You also want to keep in mind the Kickoff Secure Credit Card works more like a debit card. You must make that deposit onto your Secure Card before making any purchases, and the funds in your Secure Card account are entirely separate from your Kickoff credit account, and you can use it anywhere MasterCard is accepted. You can also withdraw cash using your Secure Credit Card with 0 fees over 55,000 in-network ATMs worldwide, and to find a free ATM for your cash withdrawals, you can do that using the All Points ATM locator. If you're familiar with All Points ATMs, this is what you're going to be using in order to withdraw your cash without having to pay any fees. However, any ATMs that are out of network, they may charge a fee for cash withdrawals. The next feature that we're going to discuss is the Kickoff rent reporting. You can build your credit with the rent you already pay. So if you've been paying rent for the last 24 months, this is a feature that will benefit you a lot. Not only will all your future rent payments be reported to Equifax, Kickoff will only report on-time payments. They will never report any derogatory information. Now, rent reporting is only available with Kickoff Premium and Kickoff Ultimate. So if you use Premium or Ultimate, There's no extra charge for this service. It's important to note though, if you'd like to report any previous rent payments, there is an option for back reporting. So this is a feature that is a one-time charge of $50. Currently though, only rent payments made from your connected bank account are eligible for rent reporting. Now, if you want to use this feature, from the user dashboard, select the rent reporting tile, then simply provide a couple of details about your property, your real estate situation, link your bank account that you use to actually pay your rent, and Kickoff will automatically report the rent paid each month with that account that has been linked. So here are some additional questions that you may have when it comes to Kickoff. Let's start with reporting time. It can take 30 to 45 days for Kickoff to show up on your credit report, depending on when in the month you signed up. After Kickoff submits the reports, the bureaus take time to review and process them. Once they have been accepted and uploaded, you can expect your credit report to update between the 10th and 15th of every month, if not sooner. Kickoff also has a debt relief program. It's completely free. Now, this lets you request debt relief for charge-offs and collections on your credit report. Debt relief offers can include up to 50% savings with affordable monthly payments as low as $15. Now, on this channel, there are plenty of videos that show you how to repair your own credit without you having to actually pay anyone to do so. My recommendation is that you look at that instead of trying to use a debt relief feature or service. However, I just want to point out that it is something that is offered to you. Kickoff also has a dispute option that makes it easy to correct or update information on your credit report. There are many videos on this channel that will show you how to do this on your own. I have tried the Kickoff dispute options myself. I didn't really see any benefit from it. It did not help me. However, if you would like to try it out, that is an option that's available for you. I also made a small note on the side here, just so you remember exactly where these accounts report. The Kickoff credit account, the revolving line of credit that reports as a credit card to your credit report, will report to all three credit bureaus. The Kickoff Credit Builder Loan, again, an optional service, will report to TransUnion and Equifax. The Kickoff Secure Credit Card will report to all three major credit bureaus. And once again, the rent reporting will report to Equifax. Now, I want to discuss who is Kickoff for and what I recommend this for everyone. Now, Kickoff Credit Builder can benefit people who want to build their credit, including those with no credit history at all or a very low credit score. It can also be helpful for people who have damaged their credit and want to improve it. If you already have current loans that are positive with an established credit history, then I don't think Kickoff would benefit you. I also think that if you have credit cards with a utilization that's very high, this will not actually help you. What would really help you is paying down the high balance on your credit cards, because that utilization is negatively impacting your credit score. Now, this will not help that. The highest limit you have is $3,500, but still each account is looked at individually for utilization. Also, if you have derogatory marks like late payments or anything like that, this will not help you very much. I recommend, again, looking at those videos that will help you improve your credit. There's plenty on this channel: remove hard inquiries, collections, and charge-offs. I recommend doing that instead of just trying to add Kickoff. There is a sign-up link in the description if you would like to check this out and you would like to see if Kickoff is something that you would want to use to build your credit. So I just want to show you guys how the Kickoff website actually looks. As you can see here, it shows me some action that can be taken on possible exposure to websites that may have gotten my information. I'm going to just say maybe later here, and we're not going to take any action right now. Now, there's also this right here, instant dispute with TransUnion, and you can do this directly via Kickoff. Again, I told you how I feel about that, but if you want to check it out, then it is here. Now, this is the Kickoff credit account. As you can see, it's $35 per month, but it reports a $3,500 trade line to my credit report, making my utilization always perfect on this card. Here is my next due date, but my auto pay is set up. Even though I have plenty of credit cards now and my credit score is fairly high, we're getting close to the 800 range, I do still have this account. I will probably keep it for one more year, and then I will probably get rid of it after that. This is the Kickoff Marketplace. This is where you can view offers like the ones that I spoke about, where you're making purchases for digital products and things like that with your Kickoff credit line. There's also bill reporting, which we did not discuss, but it's very similar to Experian Boost, where you can actually boost your credit with bills that you already pay. So if you're interested in that, you can click on that here. And once again, there's the option to dispute inaccuracies as well as rent reporting. And finally, right here, I just wanted to go to the credit builder loan. As you can see, congrats, you've built up $120 in savings. That means that I have saved $10 for 12 months, and I'm going to show you what it looks like when you withdraw this money. So click on the withdraw option here, and it says, first, let's withdraw your $120 in savings. You have multiple options that are fast and free. Get back 100% of your savings. There is no charge. So let's go to withdraw here. And I can transfer that to my secured card, but I'm not going to use that card. I know I won't. Instead, I'm going to transfer that to my bank. And that's going to be to my Navy Federal account, $120. We'll click transfer and we'll click confirm. Now, after I confirm that, it prompted me automatically to begin a new $120 worth of savings. It'll automatically save $10 per month, but I don't want to do this. I don't need it. I have really big loans now. So this served its purpose and it was great for the last 2 years, but I no longer need to use it. So I'm going to hit the X up here. Now, if you guys notice, the credit builder loan withdraw option is now gone. It's no longer here, but there's the option to renew. So if I did want to open for another 12 months, I have the option to do so here. The last thing we're looking at is the secure card option. As you can see, I have a 98 cents balance. I don't really use this card anymore. I can transfer money here from my bank. And previously, what I used to do is take the $35 I would pay for the whole year and I would put it on this secure card. That way the card would report and I can actually pay my revolving account with Kickoff from my secure card. That way both would report something and I wouldn't have to do anything because it would just take from this card to pay that one. And I would do that for the whole year. I stopped that after year 1 and I got a year's worth of on-time payments from this account. There's so many ways that you can go ahead and deposit money to this secure card. You can move it from your direct deposit, which can take 1 to 2 days, and you can schedule automatic deposits. Thank you guys so much for watching this video. I do hope this information was very useful to you. Once again, there is a link in the description if you would like to sign up for Kickoff, and I've enjoyed using it for the past 2 years. I will not use that credit loan builder anymore. However, I still will use the revolving account. It's going to serve me for another maybe 12 months, enough for me to get my mortgage and get a brand new home. And once that's done, I will probably get rid of it and start actually applying for some very good personal credit cards. If you have any other questions about Kickoff, please drop that in the comments below. If you currently have Kickoff now and you just want to share your experience, please drop that in the comments as well. I love it when you guys share that information. Thank you guys for watching this video and you have a wonderful day. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. And today we're going to be talking about Ava Credit Builder and the instant $2,500 trade line that you could be approved for with no credit check. So back in 2023, as I was rebuilding my credit, I was searching for credit cards that I could be approved for, and I came across Ava. Now, I had no idea what this was. I read some reviews, but I wasn't quite sure. It was very new at the time, at least for me. And I've had this account for over 2 years, and I want to go through all the products that they offer and my personal review and experience using this Ava Credit Builder app. At any point in this video, if you'd like to sign up for Ava, there is a link in the description. You'll also get $5 when you sign up. So without further ado, let's get right into the video. Let's start by discussing who Ava actually is. Now, Ava is a credit building app that was designed to help you boost your credit score. Even if you don't have a credit history or your score is less than stellar, it offers a simple, user-friendly experience and is especially great for people who have struggled with establishing credit in the past. So in my personal situation, I was looking for a credit card that I can get approved for. At the time, I had a lot of charge-offs, so I was not getting approved for any credit cards. I also tried the secure card route. However, all of the secure card options, at least as far as my credit report was showing, it was a very low limits because I'd have to put up capital, my own cash, in order to actually fund this credit line. So when it came to Ava, having a credit line that would report $2,500 and help me build credit was very important for me. Now, Ava did actually help me build credit fast. 74% of Ava members see a credit score improvement in less than 7 days, and I'll go over that and exactly how that works. Ava offers two products that work differently, but they both do help you build credit as long as you're using them responsibly and you're managing your timely payments. Both accounts report to all three major bureaus, which is very important. And this is going to be TransUnion, Equifax, and Experian. And it reports it within the first week of you joining Ava. So you can possibly see the Ava Tradeline on your credit report within 1 week. The goal is to help you add credit history as soon as possible. Once again, 74% of people that use this saw improvements, including myself. Moreover, your on-time payments are reported within 24 hours. So that's going to help you increase your credit score a lot in a very short period of time. And this is an instant approval. So Ava does not check your credit score when you apply, and there's no credit score requirements. There are no interest charges as well. So there really is nothing to lose by you actually signing up for this product. The first product we're going over is the Ava Credit Builder Card. This, once again, has no credit check, no interest, no deposit like a secured card, and it has no annual fee. Now, the way that this card works is similar to any other credit card, but it has a built-in feature that is meant to help you spend responsibly and build credit history. So you'll have a credit limit that's reported. It's up to $2,500 and the ability to use your Ava Credit Builder card on more than 60 online merchants that are approved by Ava. Now, I did list some of those merchants here, and we'll go over that in a second. Now, this can help your on-time payment ratio, which is 35% of your credit score. It can also improve your credit card utilization, which is 30% of your overall credit score. Both your utilization and on-time payments can be reported within 24 hours to the credit bureaus, and that's how you're going to see a vast improvement in your credit score in a very short period of time. I set the Ava Credit Builder card as my primary payment method for most of my subscriptions like Netflix, Spotify, Hulu, Cox, and there are some other ones here that you could take a look at, but the Ava card would be charged for my subscriptions, and then I would pay them off by linking the Ava card to my bank account. I would pay for the subscriptions, help build my credit, automatically pay for those things with my bank account, and I never had any late payments or anything like that. So it was a very, very easy setup for me to use this and pay for things that I was, already going to pay for anyway, while also building credit. Now, Ava will not let you use the entire $2,500 that's reported. Instead, it caps your spend limit each month to keep your utilization low, which is optimal for maximizing your credit score. So for example, if the Ava Credit Builder card is $2,500, 5% of $2,500 would be $125. So Ava might give you a spend limit of, let's say, $125, and then you could use up to that amount in order to pay off all of your subscriptions. Now, the lower your utilization, the higher your credit score will be, but you need to be paying for something. No activity does not help your credit score, because remember, a credit score is a report of how well you pay on time. You have to participate in paying off debt in order to build credit. If you don't, then you just won't generate a credit score, right? So you need to be paying off something, but the lower the amount that you're using as opposed to how much credit line you have available will maximize your credit score. Once again, 35% is on-time payments, 30% is utilization. So you need to have a credit card to be able to maximize on both of these. Now, to my knowledge, you'll only be able to access $25 when you first start using Ava Credit Builder card. That's 1%. Pretty much they put you in the perfect percentage to have the lowest utilization possible. That's going to help maximize your credit score in the very beginning. Now, as I used the card more and I saw that I was using another product, they would increase the amount that I can actually spend on the Ava card. I don't know what my maximum amount was, but I feel like it definitely got up to at least around $175, somewhere in that range. Now, the Ava card payment is due within 7 days after the Ava card is actually used. You'll need to at least have $100 linked to your bank account for automatic payments to go through. Otherwise, it will decline. And while there are no late fees or penalties for that, the late payments can be reported to the credit bureaus, which will hurt your credit score. And I've said this in past videos, If you had a perfect 850 credit score and you got one late payment, that could drop your score 100 points. So it's really, really important that you pay this on time, even though it's just a credit builder. It's the same as any other credit card. It doesn't matter what product that you have, an auto loan, installment loan, anything. If you don't pay it on time, the late payment still occurs and the same thing happens. So like I've said in many videos, credit building is a zero-sum game. You need to be perfect in order for your credit to be stellar, not one blemish. The cost of Ava is really straightforward. Ava charges a subscription fee of $6 per month when you sign up for the annual plan. So you could look at that as $6 a month or $72 for the entire year. Now, the month-to-month subscription fee is $9 or $108 per year. You can pretty much pick whichever one that you would like. I think for the ability to actually have a $2,500 Tradeline report to your credit, especially when you're in the rebuilding phase, $72 is not a big deal to just pay for the entire year. Or if you would rather be month to month, then it's only $9 and then that's just $108 for the entire year. Whichever way you prefer, it doesn't really matter. And Ava also has other products and services that you can use that are included with this same monthly fee. And then we're going to go over those products next. The Save and Build credit account is an additional product included with your Ava service fee. So you're already paying for this particular product when you pay for Ava. Now, the credit builder loan has no interest charges. There's no credit check. There's no late fees. It does require an existing bank account for payments so that you can set that up and you can actually save your payments. And it works like this. You pay or you set aside, however you want to look at it, between $25 and $100 per month. This loan is secured, so you will get all your money back after the term is over and you've made all the payments. These are monthly installments that go to Ava. They're placed in the Saving Builder account. This account doesn't earn interest, so unfortunately you won't be able to earn any additional money, but each payment is reported to the credit bureaus. After 12 months, you receive the full amount. It's released straight back to you, and it can be anywhere from $300 if you did $25 per month or $1,200 if you decided to do $100 for 12 months. Ava doesn't charge a finance fee. There is no APR for this service. So you're simply just committing to saving money that requires a monthly contribution and helps build your credit history. I think for that, it's a pretty straightforward thing, and there really is no reason why you shouldn't do it. However, just like any other form of credit, late payments can be reported to the credit bureaus, which can harm your credit score. Again, there's no late fee, but if you did not pay this on time, like anything else, it will report. Any other credit building loan will charge you APR or a financing fee to cover the service. But since Ava doesn't charge you a finance fee and you're already paying the monthly subscription of either $6 to $9, it feels like the Save and Build credit account is an additional product for the service fee that you already pay. I mean, technically it is. With every on-time payment, your credit is positively impacted and becomes good payment history, and in 24 hours, it gets reported. So if you have the Ava card and you have this account, I mean, instead of doing 12 on-time payments in a year, you'll stack 24. So it's just double. It can definitely help you. This account also helps with credit mix. The Save and Build credit account will be categorized as an installment loan. Credit mix is 10% of your overall score. So a good credit mix will demonstrate your ability to manage different types of debt. Now you're impacting 75% of your overall credit score, 35% for on-time payments and payment history, 30% for utilization, and 10% for your credit mix. This will help you save money and build your credit all at the same time. So I think it's a really good product. Again, very straightforward, very easy to use. Ava also has a rent reporting feature that allows you to report your rent payments to all 3 credit bureaus. However, this is only available to some users at this time. When I log on to my Ava app, I'm actually able to see it and it looks just like this. You won't find this listed on their website either, but it's expected that this will be available to all users this year in 2025. So you could set this up very easily if the option is available to you. You connect your bank where you pay your rent from using Plaid. You then follow the instructions to register your rent details, and then Ava will report your monthly rent payments to all 3 bureaus, which helps you build credit and improve your history. So now you can have 36 accounts as well. In this one, I mean, if you have rent, this might look like an installment loan that could be $2,000 to $1,500, $3,000 a month, which once again, just continuously helps you build your credit score for things that you are already going to pay or to simply save money. So if you do have the option to use this, I think it's worth it. Once again, it's no additional cost. It's already included with your Ava subscription. So realistically, if you have the option, there are 3 accounts that you have in total to help build your credit score overall. Now, is Ava worth it? Technically, you can build your credit with any credit card, and for the most part, you can do it for free. But we do have to keep in mind who this product is geared towards. So for me right now, where I'm currently at, I actually still have my Ava credit card still reporting to my credit report simply because it has a lot of history. So when I go to get a mortgage loan, eventually that's what I plan on doing. I probably will stop using Ava sometime next year, maybe even this year. It just kind of depends. But traditional credit cards require you to have a credit check. You have to get approved. And even if you're looking for a secure card, you still have to give a deposit. Not to mention, a lot of times secure cards have annual fees. You'll also be subjected to higher APR. Now, if your goal is to build credit, just to build credit, like that's it. This is a much simpler and, to me, much better alternative. It puts you in position to always have perfect utilization. A $2,500 limit for someone who's rebuilding credit is pretty good. Most secure card options, a lot of people start with $500, things like that. And even if you got a secure card, like I got a secure card at the same time that I got Ava, I just use this and that secure card both in combination to just help build my credit score. Now, Ava reports to all 3 credit bureaus, and that's for all of their products. They do it on a weekly basis to ensure that your score sees improvement as quickly as possible. So with all that being said, if you were looking for something to get started while you were rebuilding your credit, I do believe this is a great product for you to use, whether it be the secured loan builder or whether it be the credit card or whether it be even rent reporting. All of these options are good. Only drawback is that if you have a late payment, they will report it. The only way that you can combat that is to set up automatic payments and make sure that it's at an account where you'll always have a balance. As long as you do that, you really can't fail. Like that's the only way for you to fail. But also with any credit card, if the same thing was to occur, same difference. It's going to report, it'll hurt your credit. So that's really the only risk to you. Other than that, I think for the price, it is worth it. Once you are able to actually get some unsecured credit cards and your credit is cleaned up, do I feel like you still need it? No. After that, you can really get rid of it. I would say the only difficult part is that you do build some history with this. It will be one of your older accounts, but it will still stay on your credit report for 7 years, even after you stop using it. So either way, like when it's all said and done, I think it is a great tool on your way to building credit when you can't get a secure card or you can't get an unsecured card, or if you don't have the means to do a secure card deposit. Any of those situations, yes, I do believe this is worth it. So currently I'm on the Ava website and they had some illustrations that I thought were just perfect to use as an example. And it says a good credit score makes a big difference. So this shows an example of a consolidation loan and how much more you have to pay when your credit is, maybe at 600 as opposed to being at 740. So there's someone named Derek who has a credit score of 600. His interest rate is 19.5%. In this example, Derek pays an additional $2,345 as opposed to Pam. Now, this is 6 months after using Ava. Pam improved her credit score to 740, and she got to save that because she had a lower interest rate. Now, of course, these illustrations aren't, real people, but like even this comparison right here is kind of like dramatic, like 19.5 to 4.5. Chances are you're not getting an interest rate like that. So it is an exaggeration, but hopefully you understand exactly what they're trying to actually, paint the picture for here. So an auto loan in this situation, Peter's at 650, and we talked about this even in other videos, but this car is $21,700. Now look at the difference. one person, Peter's going to pay $32,465 at 12%. And then this person, Mary, with a 720 credit score, is going to pay 4.25%. The difference that they're going to save where they're buying the exact same thing is $6,000 overall. Now, this one is actually very normal. This is a very normal comparison that you could draw that really can happen. This is very realistic. You might save $6,000 in the course of a 72-month term just by using something like Ava for a short period of time to help boost your credit score. Now, the last one is your mortgage. Now, your home loan for 30 months is $326,000. In this example, I'm going to be honest, there's a lot of scoring models where I don't think that they consider some of these fintech banks as weighted scores. Like, I don't know if it actually helps that much. So I can't say like feasibly this actually makes sense. For a consolidation loan, possibly. For an auto loan, possibly. For a home loan, I'm not quite sure. But if you look at this, it does say that for Joe's going to pay $3,850, and then comparatively, Sally would pay $2,326, and then that's going to be a difference of $26,000. Once again, this one is kind of a gross exaggeration. The auto loan is very realistic. The consolidation loan interest rate, 4.5%, is very unrealistic. You're not going to see loans this low, but the point that it's trying to illustrate is already, well said. The point is that if you are someone that, let's say, doesn't have any derogatory marks, you don't have any late payments, you're just trying to just build credit for the first time, like you're new to credit, or maybe it's been 7 years, all of your old debt has fallen off, and now you're in the process of trying to get approved for things, but you're finding that you're not. This might be the thing that will take you from a 600 credit score to like a 680, close to the low 700 range. Then that might put you in position to get a car at a lower interest rate, maybe the credit card that you're looking for, your auto loan at a lower interest rate, possibly can even help with your mortgage. That is a realistic possibility. It could help with that. So in those situations, it's like, what do you think that it's worth in the end? What do you think that it is worth? Is it worth $72 in a year or $108 in a year for you to potentially save this much money? And then, that all depends on your perspective and how you feel about this. Thank you guys so much for watching this video. If you found this information useful, please let me know in the comments. If you've used Ava before, share your experiences. I'm only going to recommend stuff that I've personally used and it really did help me. So for me, it did help. Other people have other experiences. When I did the Ava Credit Builder loan, they automatically, I think, tried to sign me up for another one. And I had to contact them and tell them that I didn't want to do another one later on. I think that may have been the one thing that I really didn't like. Other than that, my experience has been really good overall. Give me your experience. Let me know in the comments below if you've used Ava. Did you like it? Did you enjoy it? Like, let me know exactly what this did for you. Or if you've never used it before, there's a link in the description that you can click on right now. If you sign up, you'll get $5 just for the sign up. So again, that link is in the description. Thank you so much for watching this video, and you guys have a wonderful day.